Hey guys, I just wanted to expand on my last video. In the last video, I talked about debits and credits and how they represent increases and decreases to accounts on the left and right side. And this is what I'm talking about right here on page 2. I've got some T accounts set up here. And what I'm going to do is walk you through these transactions and how they would represent or how they would be recorded as debits and credits in accounting. This is a textbook example, but I'm also going to talk about how it might be different or you might see variations in a software. So let's just get started. I'm going to do this on my whiteboard. All right, so in this example, I separated the accounts by category, and then I put some transactions here. On the second page of the blank form, I've got some T accounts, so you can print this out and follow along. And then on the last page, there's a trial balance. So in the end, we can make sure total debits equal total credits and everything balances out. So I put the T accounts on the board. I am very limited on space, so I had to make these kind of small and squeeze them in here. But I've got my assets here. Remember, those you increase with the debit, decrease with the credit. Credits on the right side, debits on the left side. Here's my payable account, which is debt or liabilities. For payables, you increase what you owe to others with a credit. You increase your debt with a credit. But as you make payments towards that debt, it decreases the amount you owe. It would go on the debit side. So add to it with a credit, subtract from it with a debit. For capital accounts, you add to them with a credit, subtract from them with a debit. Now, for capital, that represents the owner's investment. If you are taking an accounting class, it will teach you the opposite rule for the drawings account because it's the owner taking money back in, and it will tell you that you need a separate account for that. But in real life, in a software, just remember you're adding to your investment with a a credit, and then subtract with a debit. Same thing with the drawing account. The drawing may show up as a negative on your balance sheet, which means you're taking money out. It's the opposite of putting money in. So that's all. That's a little confusing. I may make a special video just on that topic at some point. But for now, just remember, owner putting money in, it's a credit. Taking money out, it's a debit. Okay, and then revenue is the money earned from selling services or products. So you're going to add to revenues with a credit, subtract from them with a debit. You would likely not debit the revenue account unless you were giving someone a refund. And then for the expenses, there's 3 of them in this example. You add to your expense accounts with debits, subtract from them with credits. Okay, so I put little pluses and minuses on mine. You can do the same on your printout if you want to. So let's just go through these examples. So the first one is Wall, the owner of the company, invested $90,000 into his business in cash. Now it says cash, but like I said in my last video, cash represents normally the checking account in a business. So cash, we're going to add to it with a debit. So we would just put 90,000 here. And then capital, this increases the owner's investment. So we would add to that with a credit. So we've got a debit and a credit. One's adding here and one's adding here. So we're adding to 2 different accounts. And then the next example or next transaction is they paid $4,500 for their current month's rent. Now it doesn't say whether they paid cash or wrote a check or anything like that, but you just assume if they paid something, it came out of cash or checking. So we're going to subtract from cash with a credit. And then that is rent expense, which is an expense account. We're adding to the expenses of the business. So it's going to go on the debit side of rent expense. So we had a credit here, a debit here. One is adding, one is subtracting, but my total debits and total credits are going to equal in the end. Okay, and then they bought office furniture for $15,600 in cash. Now in textbooks, it will tell you that office furniture is an asset account and you need to put it in the asset account. We're adding to the furniture of the business, so it's gonna go on the debit side here. Now in real life, if it's a small amount, you may put it in an expense account, but it just depends on what your CPA tells you to do. But for this, we're assuming we're doing this by the textbook way, and we're gonna put it in an asset account. Okay, so we're debiting to add to our furniture, add to the furniture of the business, $15,600, and then we paid cash, so we're gonna subtract from cash, so that's gonna go on the credit side. Okay, then the next one is they bought office equipment for $4,000 on credit. And again, office equipment is an asset. If it's a small piece of equipment, they may have expensed it, but in this particular example, in this textbook example, we're gonna assume it's an asset and we're gonna debit the office equipment account to add to it. Now it says on credit, so what that means is they haven't paid for it yet. They're gonna pay for it later, they owe the money, so that's a payable, that's a debt. They owe somebody $4,000. So we're adding to debt, so we're gonna put that on the credit side. Now, if you aren't sure what to do with that, if you aren't sure whether it's a debit or credit, but you know that office equipment was a debit, then you can just assume that accounts payable must be the credit, because you always have to have a debit and a credit. So even if you only know half of the answer, but you're not sure about the other half, you can usually figure it out. Okay, and then in E, they perform services for $11,000 in cash. So performing services is earning revenue. So we're gonna wanna add to our revenue account with a credit. Revenue gets added to with credits. And then they receive cash for that, or checks, or debit card payments, whatever the case may be. So we're gonna add to cash, add to the checking account with a debit. Okay, then in F, they paid $1,350 for the monthly telephone bill. Telephone is an expense, so we're adding to the expenses of the business with a debit. And we're gonna credit cash. It doesn't say paid cash or paid with a check, but we're just gonna assume when we see the word paid, they paid with cash, unless it tells you otherwise. So that would go on the credit side of cash to subtract from cash. If they're paying for something, that's gonna take away from how much money they have. Okay, then G is a little tricky. It says they perform services for $7,600 on credit. Now, if you were doing cash basis accounting, you would not record that because they haven't received the money yet. But if you're doing accrual basis, which is what we usually assume in textbooks, in accounting textbooks, we're gonna assume that they are gonna record that. They're gonna record the revenue they earned, because whether they got the money or not, they did earn the money. So we're gonna credit to add to service revenue, but we're not gonna debit cash because we haven't gotten the money yet. We're gonna debit accounts receivable. So accounts receivable represents money owed to the business by customers, and we're increasing, just think of this as customer debt. We're increasing the customer debt. So we're gonna add to it with a debit. And as those customers make payments, we'll do the opposite, we'll do a credit. But for now, we want to show that they owe the money with a debit. Okay, then in H, it says they issued a check for $3,000 to pay salaries. So now they're saying issued a check, but we're just gonna assume cash, check, all one thing. We're gonna subtract it from cash with a credit. And then we're increasing the expenses of the business, so it would be a debit to salaries expense. Okay? Okay, then in I, they received $2,000 from credit clients. So credit clients would be your accounts receivable customers. Customers who haven't paid yet, well, now some of them have paid. So you would want to subtract from what they owe with a credit. And then add to cash, because the business is receiving cash, with a debit. Yes, Caleb. I have a guest student today who's going to learn debits and credits. Okay, so they're receiving money, it's a debit to cash, and subtracting from the customer debt. Okay, then the last one, Wall withdrew $3,000 for personal living expenses. So he's taking money out of the business to put back in his personal account. So it's taking away from the cash of the business. So we're going to do a credit to cash. And then a drawing is the opposite of putting money in. We're taking money out. So we are going to do a debit to the drawing account. Okay, and then once you get all your transactions in as debits and credits, then you're going to want to get the ending balances of these accounts. So let me grab a calculator. Okay, so debits and credits offset each other. So if you have a debit and a credit, like here, like in accounts receivable, you're going to subtract. So you've got $7,600 on the debit side, $2,000 on the credit side. So the difference between those numbers is $5,600. So the ending balance is going to go on the debit side because that side was bigger. So it's $5,600 that the customers still owe. That's what it represents. If there's only one number, so in accounting we just draw a line and we put the ending balance underneath. If there's only one number there, you really don't have to do that because that's the ending balance. But I'll go ahead and do that for these. Almost all of them only had one number. Revenue had 2 credits, so we're going to add those 2 credits together to get an ending credit balance of $18,600. Okay, and then for cash, that's probably going to be the easiest place to make a mistake. If your trial balance doesn't match, the first place I would look is cash and make sure you did the math correctly, because that would be an easy mistake to do the math or mess up the math. Okay, so what I want to do here is add up my debits. Those add up to $103,000. Then I'm going to add up my credits. Those add up to a little over $27,000. And then I'm going to take the difference between the debits and the credits. And I should get $75,550. So that's my ending balance in cash. That should represent what they have in their checking account right now after all these transactions. Now, I put it on the debit side because the debits were a larger number. These added up to over 100,000, whereas these added up to about 27,000. So this side was bigger. So my ending balance goes over here. Okay, so now that I have all my ending balances, I'm going to take these balances and I'm going to put them into a trial balance. So a trial balance is really just a list of the accounts and their ending balances as of a certain day, and you just want to make sure your total debits equal total credits. So we're going to go back to the computer and I'm going to show you that part.
All right, now that you have your debits and credits recorded, this is what I had on the board, although this is much neater. What you're going to do now is list all of these accounts on your trial balance, which is just a list of accounts and their balances to make sure total debits equal total credits. That's all this is. You're just going to list the account names like I did here. And then you're going to put the ending balance from the T account in here and make sure you put it in the correct column, as far as whether it's a debit or a credit. So my cash account, as I just showed you on the board, had a $75,550 ending balance on the debit side because the debits were bigger than the credits. So I brought that number down here. Accounts receivable had $5,600. as an ending balance on the debit side, so I brought that down here, and so on. So some of these have ending credit balances also, so just make sure you pay attention to that. And then you're going to add up the total debits, add up the total credits, and they should equal, which they do. If they don't equal, I want you to go back and make sure you have things in the correct column as far as whether they're debits or credits. And then if they still don't equal, you'll need to go back to your transactions and try to figure out where you made a mistake. More than likely, you put something in the wrong column. That's a typical mistake. Or you've put a debit in and you forgot the credit, vice versa. But that's all there is to it. Hopefully this helps. Hopefully this gives you a little bit better understanding of debits and credits. Thanks for watching.